give people greater career path opportunities as well. The ability to specialise in certain roles that will give us a greater technical understanding and competence as well. The ability to share processes as well, potentially, I think is something else we're very keen to look into. So I think there are many reasons why this shouldn't just be seen as a reduction in resource. I think hopefully it will build upon the strength of the team at longer term. But there is a hump of understanding and work to get through to get us to that point in time. There are other opportunities. For example, we both share the same finance system, for example. And there's a piece of work going on to try and get us onto the same version of that as well. And that will enable us to do things once rather than twice, being two different organisations. And so there is a series of work and actions that we're following up to try and get us into a place where this isn't seen as a big drain of resources, but actually helps us to be a more effective and better and more resilient finance team as well in the longer term.
Thank you. Councillor White. Sorry. Mine I don't have to turn off, so...
Thank you, Chair. Two things, if I can. First of all, not quite sure I understood with regard to the social housing regulator compliance issue why the likelihood of the severity of that risk was increasing. Is it that the deadlines, is it essentially that deadlines are approaching faster than we're making progress towards meeting it, or have I misunderstood? That's one other.
Thank you.
I think there's also a question mark about some of our record keeping historically, knowing that these are new measures, new targets, and so we're not necessarily, because we need to be absolutely certain on each of the property that we have the right records in place, and when we look at it in detail, at least the detail that the regulator requires, so there are some gaps, I think, in our understanding, and that presents a risk from our point of view. It doesn't necessarily mean that the properties aren't in the state that they need to be, but it means we don't know. So I think whilst there is uncertainty about the quality of our records, our risk is heightened at this point in time, and the regulator has the ability to issue quite high level fines actually. So I mean, it needs to be an area of focus, and it is. And there's a considerable work being done to progress the quality of our record keeping, and actually we're in a much better place even today than we were then probably when this report was written.
So essentially, is it a stock condition survey which will validate the fact that the records match the position on the ground?
It will help, but I think it's just one facet of the piece of work that we need to do. So it's like gas safety inspections, for example, electrical safety inspections. It doesn't mean they haven't been done, but unless we've got an accurate record for every property of when it was done and that it was signed off by the right person, then we're not actually in full compliance. So that's it's going through and making sure that we've ticked all of those off. As I say, a lot of work has gone into it already, and I think we're actually in quite a good place. But until we can say that for every property that we're where we need to be, the risk is, as I say, elevated at this point in time.
So it's been identified, and you are hopefully optimistic, and we will watch that space at the next committee meeting. The other one with the big raised arrows was climate change. Sorry, Councillor. Yes, because it was mentioned but skipped past, and this is obviously very topical at the moment. I won't go into the politics, but central government is affecting this as well. Your question, yeah, Councillor.
Yeah, so my question was going to be the carbon emission targets. It was a little bit glossed over, and then it referred to it's in the report, but there's not much detail in the report, to be honest, on this. It's gone from 9 to 20 to our highest risk item in the whole council. I was just wondering if you could elaborate a bit on why it's such a high risk item now versus last time.
Thank you. Yeah.
So we have an internal process where we bring all the corporate risks to our corporate leadership team on a regular basis, and the danger is that you gloss over them because they're always there, and you just look at it and you say, yes, that's, we've identified a risk. But we had a long, hard look at this particular risk and thought, are we doing everything that we need to do to making sure that we're going to meet our deadline, 2030, I think it is. And I think we just identified, time is escaping really. The targets are still there to be met. I think we need to give it more attention, more focus as a corporate leadership team. I think we introduced a number of actions to try and understand the current situation and to give some more focus to it. But again, I think it needs to be higher up the agenda, and that's really what basically the statement that's being made here is that there's still a target to be met. There are a lot of things that need to be done to get to that point in time. Might not be getting a sufficient focus within the officer core of the organisation, so we've elevated up there to give it more focus, more attention. It is for this committee to comment on that, of course, and to make any observations about that and whether they think it's in the right place or not. We've had there's some actions in there. Some of those have been met already in terms of a review of the climate change action plan was done at the last meeting of the senior leadership team, for example. And that led to a number of follow-on actions that we need to follow up on as well.
Yes.
Yeah, just to comment on it, I mean, the transport and air quality, I mean, I think we all know what this is getting at, but I mean, it really has no detail on to reduced impact on human health. I would like to see some, whether for this meeting or just the council in general, I think more needs to be done on this, to be honest.
Thank you.
I think just in terms of the remit of this committee, I mean, the remit of this committee isn't to solve some of the issues, of course, that exist. It's more to say that is this a fair statement of where we are and whether we're giving it enough attention or focus. Is it a risk to the organisation in terms of our current performance, or is further action required? I mean, so in terms of actions around that, then that's probably in the remit of stronger place, I would imagine, as a scrutiny committee, and that's one of the things that we need to feed to that committee. Further action in that space, potentially.
I would accept that it's not our place to solve this problem, but it is our place to express concern as a committee and be assured that this concern is forwarded to Cabinet and then to the Council. I'm sure they're aware of it, but it's our job to highlight it and spot it. Thank you. So that's the risk management done. Yeah. Oh, sorry.
I also had a question about the risk management policy and strategy, if that's all right. The further actions on page 71, do we have a sort of timescale, or do you have a timescale in mind for delivering those, and who does sort of responsibility for delivering them sit with?
So no, we don't have a timetable at the moment for it. So it's quite a new policy, and risk management is always evolving. So yeah, we will definitely be putting that in place. So there's other things that have been going on in the background. So we've just recently created an operational risk management group, and part of that group will be taking that action plan forward. So it's still evolving, and we will make sure we nail it.
Thank you. We can move on then to item 10, the annual report of the Chief Internal Auditor, on pages 73 onwards. Thank you.
Thank you, Chair. So my annual report is a really important document. It feeds into the annual governance statement, which is, again, another important document as part of the statement of accounts, and you have that later on in the agenda. So the first thing I want to do is take you straight to page 74 into the bold box there, where I have to give an opinion on what I think about the adequacy and effectiveness of governance, risk management and control processes. And I'm saying they are adequate and effective. And that's the highest accolade I can give. But it's really good for the council. And I haven't got any significant issues to bring to your attention. So the rest of my report sort of supports that. So if I continue going down the report to the top of page 76, you can see the table there of the reports that we've issued, a similar number to previous years. And we actually have 3 limited assurance reports, which relating to cybersecurity, feeder systems, reconciliations, and the quality management KPIs and payments mechanism. And the details of that particular report is in my progress report. So we've done 8 what I call real audits, but lurking behind that is a lot of work that internal audit does in the background. And if you look at Appendix A, I don't intend going through that. That gives you all the detail of the work that we do and the things that we get interested in order for me to give that opinion. A large part of the work of internal audit is that tracker process, and that's important, and it comes to the audit committee at each meeting, because it's really important that where we make recommendations, they're actually implemented, because there's no point making recommendations if nothing's going to change. And that's why we give that detail to you. So on the bottom of page 76, there's all those other assurances that we have. So we get involved in special investigations, we give a lot of advice, and have a really good understanding of how the council works. Talking about the effectiveness of the internal audit function, so we've just recently gone through an external quality assessment that has to be taken every 5 years by an independent assessor, and the results of that will be coming hopefully to the next committee meeting. But we have some KPIs in place to monitor how we're doing it as a function, and they start on the bottom of page 77. So again, to make sure that we have that management input and buy into our recommendations, we have KPIs around issuing draft reports and final reports. So we've had a blip on the management responses. Ideally, we like them within 10 working days. But if it's a particularly complex area, such as the feeder systems one was and the Qualis one, I'd rather spend more time getting the report right, getting that management buy-in, and therefore there was, I think, one audit that pushed us to the 17 days, so that was an anomaly. I'm happy to take any questions.
Councillor Whitehouse.
Sorry, Chair, I wasn't on the committee last year, so I confess to not knowing what a feeder system is.
So you have a finance system, and then you have different parts of it that will feed into that. So it's where you do your reconciliation. So where you take yeah.
Any other comments or questions to this part of the agenda? Thank you. Thank you for the work that goes into this. Thank you. It's now item 11, yes. We've just done 10. Thank you. Who can address that? Gentleman, sorry.
Thank you, Chairman. This report is the annual summary for 2022-23 for the Corporate Fraud Investigation Team. The purpose of this report is to give the committee an idea of what we've been doing over the last year, the successes we've had, etc. If we can go down to pages 100 leading into 101, you'll see there that it gives a general overview of our activity during the year, during which time 45 new investigations were opened, with an additional 111 being closed during that period. The second graphic on page 101 gives us a better view now of the types of frauds that we're finding and that we're closing, and this is down to effectively a new fraud case management system that we got in late 2021, and we've used it now for a full year, and it gives us a much more flexibility in closure definitions and things like that. So we can see at a glance the kind of things that we're dealing with and that we're closing, rather than the old system, which was limited to either a fraud or a no fraud outcome, and you had to dig a bit deeper to actually find the details on that. More importantly, success rates of the 45, of the 111 that were closed, 45 of those investigations were closed as a form of fraud being detected. As you can see from the graphic, the areas where this was found. As a percentage of the case closures, the fraud-proven cases account for 41%, and that represents overall a 4% increase in fraud found this time last year, the previous year. I won't dwell on the rest of the report. What we try to do is we try to include a number of sort of more interesting and notable cases, so you can get a more in-depth flavour of what issues we've faced over the last year. And as you can see there, we've made reference to the right to buy applications, tenancy successions, and also some internal investigations that we've been involved in as well. We have got involved during the last year in other kinds of work, and as you can see, we were involved in a data analytics group, and we also have made ourselves available to assist IT in the retrieval action of laptops and equipment and things like that. I'm happy to take any questions on this before I move on to the next report afterwards.
Yeah. Councillor.
Thanks. I did want to welcome the 100% continued policy of vetting the right to buy applications, because I mean the importance of preserving the housing stock, for those who most need it is really important, and that's time well spent if we retain council properties available for people on the housing register. I mean, if we're discovering a relatively high proportion of subletting among the subset of properties which come up through the right to buy process, logically you'd assume there must be quite a lot of other properties that are being sublet, and I wondered what procedures or what priority was put to trying to, if you like, proactively discover where this might be an issue.
Yeah, of course, you're absolutely right. Yeah, subletting, in terms of tenancy, social housing tenancy fraud, subletting is a very high one on our radar and on the agenda. Unfortunately, because of the nature of it, it goes under the radar quite heavily. But we do, there are numerous things that we employ in order to try and identify sublet properties, the details of which I won't go into in an open environment. But we also run a fraud hotline, and we run a publicity campaign that we do now every other year. Report a cheat in your street, where people can phone up and report these kinds of things to us. We also look at the issue proactively as well, and it just so happens that say this year, last year, we found 2 or 3 sublets through the right to buy as one of the examples there shows.
Thank you. Okay, thank you. Was that the fraud report completed, or did you say there was a second part? Item 12. Right. Oh, sorry, yes. I didn't notice. Yeah.
Thank you,
I
Chairman.
now see the 2 fraud bits identified. Yes, sorry. Yeah, thank you, Martin.
Thank you. Yep, the next one is me as well. This is this is for approval. This is the corporate fraud team plan for the year 23-24. Again, I won't go through everything on there. For those that are familiar with it, the plan takes on a familiar form, in that we will divide our time between proactive work and reactive work. Just mentioning, going on to just continuing the theme of the right to buy question, we are committed for the next year to review and vet 100% of right to buy applications. That will continue. The flavour of this fraud team plan is a little bit more streamlined than it has been in previous years, and this is just to basically reflect the situation with team resources. But I'm very happy to take questions on it.
Any questions, members of the committee? No. Thank you. So we'll move on to item 13, the annual governance statement, on pages 111 onwards. And Andrew, no? Yes. Yeah, okay. Nice sidebar.
Okay,
yeah.
This is not my annual governance statement, but internal audit is very much a key part of it in putting together the council's response to the annual governance statement, and we send out what are called service assurance statements to all the service managers to understand if there are any particular governance issues that we should be aware of and make sure that we tackle. So that's why I'm delivering this paper. So, as I said earlier, it's a very important document because it goes with the statement of the accounts. It sets out the governance arrangements for the council. It explains if there's been any significant changes in our governance arrangements from year to year. There haven't been any particular ones. And what's useful is that towards the end of the report, Table 1 sets out the sort of issues or things that we were going to look at last year, and it gives an update of where we are with all of those. And then with Table 2, it's what we think as a council is the areas that may cause governance issues or things that we need to be aware of. So the first one there is economic issues. That's just a well-known thing that's happening across the sector and across the globe as well. Statement of accounts is the second part there, and we've talked at length at Audit Committee about the external audit and the delay in those. The Financial Management Code is something that we just need to do as a council and just make sure, I'm pretty sure that we are compliant, but we just need to do that small exercise to make sure that we are compliant. And if we're not, then we'll have an action plan to address it. This year we're going to concentrate on income recovery and make sure that we get all the income that we should have as a council, which will help with our economic issues. And then financial regulations need a review and bringing up to date in certain areas. And then items 6 and 7 in that table are those common things that are coming out of the service assurance statements. So there's more work around the risk management. So we've got a revised strategy, we've revised the template, we've given training to people. Audit committee are going to be getting their training, and members will be getting their training as well. And the other area that we need to look at a more operational level is business continuity. There is an ongoing project to make sure our arrangements are fit for purpose.
Thank you. Any questions to that paper? No? Thank you very much. Item 14, Internal Audit Monitoring Report. Is this one you, Andrew? Or just back to Sarah again?
Me again. So this is our usual progress report on the work that we've done to date since the last meeting. So we've issued 2 reports. The first one on council house building, which was given substantial assurance, which is really good news for the council. We can see there was robust processes in place to deliver those developments. The second report there is around the Quality Property Solutions, around their KPIs and their payment mechanisms. After we started this audit, the council actually arranged for Housemark to come along and actually have a real in-depth look at it. We were looking at just at the payment mechanisms and KPIs, and their findings was very much in accordance with what we found. So that was a really good thing. So there is work that is being done around the SLA. There's been a lot of work at developing those relationships, making sure the monitoring is in place. And again, another look at the fundamental look at the performance indicators. So when we did the audit, it's not brilliant, could do better, a lot better, but through our audit report, Housemark and the commitment of officers, things are definitely on the move in the right direction. Going on to the recommendation tracker, numbers are starting to creep up a bit. The number of medium priorities is actually one less since we published the report, so we've only got 11 that's overdue. A lot of them are around cyber security. You might go, oh, we're really worried, you know, nothing's happening about cyber security. We're in constant contact with the IT department, and I know that they're definitely working on all of those. They're giving us an update on those. And then there's our usual, all the work that we do in the background around risk management, and then there's a little update there on corporate fraud, which Martin can answer any questions on. Thank you.
Thank you. Any questions from... Yes, Tony.
My question really is about an overdue one on cyber security, which has gone on. And it's brought to my attention because I'm aware of another public sector organisation which was crashed, and a lot of staff had to be laid off, no work was done, no service was provided for weeks. And it just sort of happened overnight. So it's not just a mysterious difficulty, it's an actual one for some organisations. So I'm really concerned that it's still overdue. And that would apply also to somewhere there's reference to these desperately old servers that are still being used. I haven't quite got a reference for it, but and I wasn't sure how whether they were core services they were providing or individual isolated ones, but I'm very concerned about this area.
Thank you, Sarah.
So to talk about the actual servers, there was just 2, and they're definitely not core ones. I have got a list of the servers and what they've done with those. So they are definitely in hand. And once they got these remaining 2 they've now got, which, as I say, are not key ones, then they're going to work on servers that are the newer servers to make sure they're up to date. And then the other one was around, potential attacks that we can have and things like that. So they have undertaken the penetration testing now. We're just waiting for the report to look at that and do our lessons learned. So the council takes cybersecurity very seriously, and we're just doing an audit on IT disaster recovery, so that if it all does go horribly wrong, we can actually bring all our systems back up again.
Thank you. Thank you, sir. Now move on to item 15, which Chris, thank you.
Thank you, Chairman, and good evening, members. Item 15 then, the Treasury Management Outturn Report for 22-23. First of all, a typo to report, if I may, Chairman, on page 152. Within the first paragraph under the heading Compliance, the first sentence should refer to Treasury management activities undertaken during the year rather than undertaken during the first 6 months. Apologies to members for any confusion caused. The report then on pages 143 to 155 of your agenda this evening presents the outcome of the Council's adopted Treasury Management Strategy for 22-23. It's probably worth highlighting at the outset that in recent years this report has typically been received by the committee in September each year following the completion of the Council's Statement of Accounts. That I'm here this evening in July is particularly pleasing and reflects the ongoing progress made in the development of the finance function. The timeliness of reporting has been one of a number of high priority development areas, and hopefully the timing of this report and also the Q1 update for 23-24 later on in this evening's agenda gives the committee some added assurance as to the management of the Council's Treasury management activities. So turning to the highlights in the report then, borrowing presented in Table 3, page 149. The year-end borrowing position as at 31st of March 2023 increased to 281.6 million compared to 269 million at the same stage last year, the previous year should I say. A total of 20 million of that borrowing relates to short-term borrowing from local authorities, with the remainder 261.6 million representing long-term borrowing owed exclusively to the Public Works Loans Board. Investments then on Table 4, page 150. The year-end investment position as at the 31st of March 23 reduced to 14.1 million compared to 18.7 million at the same stage last year. Most investments, 10 million, were held in money market funds, with further deposits of 3 million held with the government's debt management account for deposit facility, with the balance 1.1 million held in the council's main account with NatWest. Moving on then to non-treasury investments, which is Table 5 at page 151. The performance of the council's commercial property investments is also presented. It shows a closing balance sheet value of 148.5 million compared to a corresponding value of 162 million at the same stage in 21-22. Overall net income from the commercial property portfolio in 22-23 was 8.5 million, which is up from 7.5 million achieved in 21-22, reflecting strong income returns from the council's industrial units and other areas such as market rents at North Weald Airfield in particular. To finish off then on compliance, pages 152 to 155, I'm able to provide Section 151 assurance that the Treasury Management activity undertaken during the year fully complied with the 2017 Treasury Management Code. I emphasise the 2017 Code as the 22-23 financial year was the last year to which the addition of the code applied, with the updated 2021 Code applicable with effect from 23-24, which is covered later in this evening's agenda. And finally, I'm also pleased to confirm that full compliance was achieved with the prudential and treasury management indicators included within the strategy as illustrated on pages 153 to 155. happy to take any questions.
Thank you. Any? Councillor White.
Yeah, two things, if I may, Chair. And I think I read or I heard you say that the amount of borrowing from other local authorities has diminished. I wasn't clear if that was essentially because we get better rates elsewhere, or whether it's because the sort of perception of risk with other local authorities is now different to what it was before.
Sorry, the simple answer to that has been the movement in, during 22-23 has been the movement in interest rates. So short-term borrowing rates have increased, and on the basis of advice received from Arling Close, we've moved away generally from short-term local authority borrowing because there was some, how can I put it, some more competitive long-term rates available from the PWLB, and it reduces risk because obviously the forecast is upwards, so it was felt more prudent to lock out that risk, if you like, by taking out fixed rates with the PWLB long term.
Andrew? No.
Thank you, Chair. I was just the reference there to risks in other local authorities, and I wonder if that was a reference to really some of for other local authorities we've seen get into financial trouble. Yeah, so I think it points to the underlying issue actually that the government's concerned about, and it is the fact that even though these councils have got into financial trouble, their debt is still AAA rated. It's assumed to be as good as the government's debt in many respects. So the risk of default in terms of repayment to other local authorities who have lent or repay or borrowed to is negligible, if I'm honest with you. And that's really where the government's concern comes from in terms of so these are organisations that cannot fail, cannot go bust, and therefore the liability ultimately falls onto the taxpayer long term, which is why the government's still looking at tighter regulation around local authority ability to borrow. It's because of it's concern that the councils are taking taking risks that can't default on really. And therefore it, as I say, falls down to the taxpayer ultimately, and that's a risk which the government thinks is unfair.
And I suppose it's sort of linked to that. I mean, quite a lot of our borrowing is effectively backed by assets, isn't it? Because it's lent out and we have security in terms of the land or the whatever's being built there. I mean, of the borrowing figure we've got, how much of that is sort of in effect backed by assets or covered by assets?
So I think all of the long-term borrowing probably actually is, because I mean we borrow up to the capital financing requirement, or that's the maximum amount we can borrow, and the capital financing requirement is generated by capital spend. So in theory, capital spend is the determinant for how much you can ultimately borrow. So and capital spend must be, by definition, asset-backed. The trouble is, I suppose, the value of assets goes up and down over time. But actually, I mean, our borrowing isn't actually really backed by assets. It's backed by the residents and the taxpayers ultimately. So it's backed by council tax long term, and that's what gives the council its credit rating, its security, in as much as I say, it cannot default. It will always be able to either reborrow or to repay it over time from council tax income or asset disposal. The government has stepped in some of those instances where councils have found themselves in a difficult financial situation, and the inspectors do come in and do require councils to dispose of assets to try and reduce the overall debt burden. But anything that cannot be offset by capital receipts and disposal still falls down onto the taxpayer ultimately in terms of a long-term liability, a long-term obligation by the taxpayer to pay off the council's borrowing debt.
Yeah, I mean, no doubt that's correct, but clearly that's an undesirable position to be in. And presumably the council is keeping an eye on, I mean, the whole purpose of this process is to ensure we don't end up in that position. And I just hope we are, you know, keeping an eye on the balance sheets of that we're lending to. Yeah.
Yes, Andrew.
Exactly that, really. So the regulatory governance, public, transparent processes that we have really are all about, making sure that the council's watching itself on behalf of the taxpayers, but just to make sure that we are a council that's taking risks responsibly, understands which risks it is taking, believes that it has the capacity and ability to meet those obligations it takes. And as I say, the audit committee is front and centre in that, if I'm honest with you, in terms of assessing whether the council is taking borrowing responsibly and is affordable in its own financial plans and process as well. So there's quite a lot of regulation, there's quite a lot of governance wrapped around making sure that councils don't end up in this situation. Yet, unfortunately, we still see that some councils are. And that's where the government also intervenes as well. Inspectors come in, peer review. They're all parts of the process to make sure that the councils are watching each other's backs to make sure that we are, as I say, operating sensibly and responsibly.
Thank you. Thank you. If we can move on to item 16, draft statement of accounts. Can't sidetrack that one, no?
So I'm going to do an introduction to this report, if I can, thank you. But I have the entirety of the technical finance team available online to answer any detailed questions that you might have available. As you might have, including Mr. Hartgrove as well. So, first and foremost, can I give my thanks actually to the finance team for the sterling work that they've done to get these accounts in front of you in this time frame. The statutory deadline for publishing accounts this year was the 31st of May. It's been brought forward from a much later date in the last few COVID-dominated years. And given the amount of work involved in getting to publishing detailed accounts in that time frame, I think we did a sterling effort, or the team made a sterling effort, and published the accounts online on the 2nd of June, which I think is vastly ahead of where it's been in previous years, with, I would say, improvements in the production values and quality and transparency of information as well. So a huge thank you to the team, first and foremost, for their work in getting these accounts in front of you. The accounts comply with the statutory format, so there is a series of rules and requirements that we have to comply with in order, and the accounts have to conform with. Those members of the committee who have seen the accounts presentation or production in recent years will understand that the format of the accounts is extremely complicated, increasingly complicated over time as more and more regulations are added and more requirement are added to it. But it's a prescriptive format largely, I would say, and it's important that we comply with it. It does mean that to the lay person, I would say that much of the information in there can be unintelligible, if I'm honest. The front of the accounts is appended with what is supposed to be a more easily understandable, easily digestible explanation of how the council performed this year and what its overall financial situation is. And that's attached at the front of the accounts and largely, I think, in between pages, well, the section 3, financial review, which is on page 165 through to probably 169 or just beyond, actually. I'll give a quick précis in terms of the position that is set out in there, which is largely conforming with the position that we forecast would happen during the course of the year. So there was an overspend against budget on the general fund, just under £1.3 million. That was very similar to the number that we predicted in the first quarter's management report for 22-23 back in June in 2022. So although there's an overspend, we saw it very early on, and it stayed or kept pace pretty much with that during the whole course of the year. That also meant that we enabled us to build an understanding of that into budget setting for 23-24, and the budget plan for 23-24 incorporated plans to address the higher use of balances that we expected to see in 22-23. The HRA is also reported there, and that contributed slightly more to its balance this year, another £388,000. Capital, we spent less in capital terms than we thought that we would. That's largely down to slower uptake of loans to Qualis than had been a forecast, and again a large determinant of that really was more difficult economic conditions, the ability to spend money, the higher cost of money that contributed to plans coming to fruition more slowly than I think had been assumed when the budget was put together for 22-23. I'm not going to go into the detail of the report, but as I say, we have a team available to answer any detailed questions that you might have. But the report sets out the detailed statement of accounts in front of you. I would just say that and importantly, the accounts are presented to you unsigned. So there's a requirement on myself to sign the draft accounts for your consideration. But as you members of the committee will be aware, there are significant issues with getting previous year's accounts audited. The requirement that I'm supposed to sign to is that the accounts presented true and fair view. And the truth of it is, I think with increasing number of years outstanding unaudited, it becomes harder and harder to say that they are true and fair when we haven't got an order to sign off on the brought forward balances from those prior years. So there's an element of uncertainty that means actually saying it's true and fair becomes harder and harder to do. But we have brought to you draft accounts that we believe are correct. That enables them to be scrutinised. We put them in the public domain, so they are available for a wider inspection and review by the public. So it's a clear intent to be transparent about the information that we are presenting to you, and we believe that we've prepared these accounts to the best of our ability, but it's hard to put an absolute categorical statement on it, as I'm required to do, that they're true and fair. I would say that this is the same approach that's been adopted by a large number of councils this year, including Essex County Council. And it really comes down to the backlog of outstanding audits and the impact that they're having on our ability to say that we absolutely know categorically that the position we're presenting in front of you tonight is true and fair. I would say there is a glimmer of hope in terms of addressing the backlog of outstanding audits. The government published a consultation a couple of weeks ago about its proposals to try and resolve the backlog, I say, of outstanding audits. And there are a couple of actions in there. One, it intends to give each auditor a deadline for signing off each set of accounts that are outstanding. And if it can't be achieved by that date, then it will give the audit firms the ability to qualify the accounts for those years. And I expect that there'll be many qualified accounts with a statement saying the area in which the auditors can't gain their necessary reassurance, and therefore the area in which they are qualifying the accounts, in essence. And that will hopefully enable us to at least draw a line under those accounts and move forward. And there's still some issues around how auditors determine brought forward balances, and that will be an issue I think we need to still address in terms of So when you move on to the next year, they'll still need to reassure themselves that the brought forward balances into that year are correct. But the other thing that's proposed is it's considered that a lot of the concern and reason for the audit firms not signing off accounts is that they are accountable to another body called the Financial Reporting Council, who sit and quality check the work of external auditors. And there is, I think, it has existed, and it's been mentioned in the past, a concern about auditors not wanting to sign accounts off, particularly with the higher level of requirement that exists upon them, for fear of being criticised for doing it incorrectly by the Financial Reporting Council. So the government has, or proposes at least, to put the Financial Reporting Council on a shorter leash and actually ask them not to review in any great detail the audits for 21-22 and 21-22 and 2021 and years before. So hopefully that will give the confidence to our auditors, or give more confidence to our auditors to sign those off without fear of being criticised by the Financial Reporting Council. And I believe that will be a major unblocker in terms of the delays that we've seen. So government is consulting upon that. We await the outcome, but I expect the direction of travel to be probably very similar to what they've proposed, I would have thought, at this point in time. So the accounts are in front of you. That's probably all I wanted to say at this point in time. I don't know if Chris wants to add anything, or whether you have any detailed questions for the accountancy team, who are, as I say, available to answer any questions you might have this evening. Thank you, Chair.
If there are any questions for the officers, can I ask you to direct them, because obviously I'm not in a position to know who to direct the question to. Thank you. Tony.
This isn't a question, but in my experience, I have never seen accounts produced so quickly, and I'm a bit out of date, but, and a full statement of accounts in July, and a local government, which is very complex and very difficult to do and relies on so many different sources of information, given the last few years as well, and the effect of the external auditors not coming up trumps. I think I would just like to say well done to all.
Thank you.
Amazing.
Pass it on. Well done. All of it. Yes. Sorry. Yeah, yes. Goes over us, yes. Tony.
Yeah, no, it's clearly a great, massive amount of work, and I was grateful to everyone else for the work that's gone into producing it. It's always a, really interesting read with lots of really interesting details and information in it. And I'm afraid I don't have a detailed technical question to test people out on, but it was a more general question. I thought it was a very thorough introduction to it, and very sort of fair about the uncertainties. Which are the sort of key areas that are most likely to be uncertainty, or the most likely to have fallen away from true and fair in the absence of the auditor's rigour?
That's a great question. I think the strength of the statements has improved, actually, so I think we've gone in the opposite direction. I think it's probably worth emphasising some of the things that the auditors have, I would argue, gone over the top on in the last 2 or 3 years, and that's mainly out of the fear of the Financial Reporting Council, as Mr Small has said. Things like property, plant and equipment valuations, pension valuations. I mean, at the end of the day in local government, they're notional book entries in the accounts, yet there is an obsessive nature about the way they go about the audit on that one. And yeah, absolutely. And on infrastructure assets in particular has been the 22, you know, the latest sort of line of inquiry, if you like, and councils up and down the country are undergoing a fair bit of scrutiny about expenditure that took place, you know, in some cases over a decade ago and things like that. Officers have left the council and records only go back so many years and that sort of thing. So it's been particularly challenging, and we've having debates with the auditors around technical points like that. But as far as the sort of real money, if you like, the real cash is concerned, it's business as usual, really. It's the same.
And Andrew, and then to...
Yeah, just to add to that, really, it's probably the areas of uncertainty, really, and that's the subjective areas for the most part. I mean, there's a lot of debate about infrastructure assets, really, and it's been dominated probably the accounting profession for a while now. So what's the value of a road, for example? You know, how do you value a road? But depending upon how you, well, depending upon how you approach that, really, you can end up with very different values, and so there's quite a wide span of potential valuations, and that's the areas that probably dominate the audit process, if I'm honest with you. As Chris says, the areas that to do with cash, how much service is spent, the reporting of all of that, straightforward for the most part. And the team has made great strides, I think, in the last few years in responding to the challenges that are continually thrown at the local government accounting profession. Chris's team have brought forward the date by which they've produced accounts, and much better quality accounts, I would say, year on year consistently for the last 4 years, really. I think the accounts we've presented to you, I do believe they are correct. Yeah? I'm not expecting the auditors to challenge them, but until I have a cast iron, until we have the certainty from our auditors that the balances brought forward are correct, it's difficult to say with certainty that they are true and fair, I suppose, really. And the year upon year of unaudited accounts compounds the risk ultimately, and that's where we've arrived at this point.
Councillor Owen.
Thanks, Chairman. First off is a request, actually, but it's so hard to read these because, firstly, when it seems like it's an income, it's in brackets, and then further on in the balance sheet, I see there's somewhere it's a deficit and it's in brackets. Is it possible we could just put a plus and minus, or just a minus when it's a minus, rather, going forward? And then 2 questions, though. Firstly, is my statement correct that the council's basically made a loss this year and funded it with long-term borrowings? And then the second one is a very specific question which relates to the value of investment property. I've scrolled and lost it now, but it looks like there's a write-up in the value of the investment property on page 200. Movements in the fair value of investment properties plus 13.2 million. Can I find out what that's for and how we worked out it's gone up 13.2 million? I'm just conscious that commercial real estate's had a very hard year and it seems like it's gone up.
Sorry, I'll refer the investment property question to my colleague in a minute, but just to sort of come in on the bit about the loss and long-term borrowing, I think it's fair to say that the budget deficit, which is clearly flagged in there, is actually met from accumulated reserves, so that we accumulated budget surpluses, if you like, over the years. So that reduces the general fund balance. The council can't borrow, wouldn't be allowed to borrow for a revenue purpose, so it can only borrow for capital purposes. So in answer to your question, have we borrowed to fund the loss? The answer is an emphatic no. I don't know if one of my colleagues, perhaps Mrs. Fuller, could help us out on the investment property question.
Yes, thank you. The investment properties actually made a loss, went down in value in the year. So it might be the way that the note is, I'm not quite sure which note you're looking at. It might be the way the note is presented, but they did actually reduce in value.
Andrew.
I mean, it's something to do with the nature of valuations, I suppose, really, and also the impact upon the revenue account as well. So I mean, if we've got a very large industrial commercial portfolio, actually, and we're very lucky to have that because it contributes an awful lot of income to the revenue budget of the council. You know, the revenue stream actually hasn't changed that much year on year in, you know, and so actually probably our revenue generated from our commercial assets is actually increasing, if anything, at this moment in time. But valuations are a reflection upon the wider market, so factors such as you know, economic downturn, for example, will have impacts upon the overall net book value or asset value that sits on the balance sheet. And so some years we write it down, some years we write it up, depending upon what the wider market's doing. I think the really key issue, I think, in terms of our overall revenue budget, though, is how much income is it generating, as opposed to what it's worth. We're not really looking to sell them, so it's kind of an academic number to an extent. If we were looking to sell it, then it would have a different, you know, a different connotation, I think, in terms of our overall financial position. And I'll probably hand over the question about brackets and minuses to Chris. Thank you.
Thank you.
I've had a few people raise that one over the years, and unfortunately that is a standard accounting convention. It's possible to change that in management accounts reports and things, but in the statutory accounts, I think I'm right in saying it would be quite rare to see, if at all, to actually see pluses and minuses in a set of statutory accounts. But it's a fair point, and one that I've had asked a few times over the years, but not on the statutory accounts actually. So, thanks.
Councillor.
Yeah, no, thanks for that. And thanks for answering the question on the change in values, and I totally get it. It was just because it's in brackets, it looks like it's an income when in fact it's been written down. And that's my point, is like on the balance sheet, it seems when it's in brackets, it's a write down, but when it's on the P&L account, that's an income. And the two kind of, it's just really hard to read.
Thank you, Andrew.
I take your point, but as Chris says, it's accounting convention actually. It's the same in the public sector and private sector actually. So to comply, I think we need to present it that way. But I guess I've always just taken it for granted because I'm used to it, I suppose. But you're quite right. I can see how that could be confusing when it's considered by I suppose non-accountants. Thank you.
Are we done? Yes? Any further questions? Thank you. And are there any reasons for exclusion of public and press?
No, Chairman, not tonight.
Thank you. Oh, sorry. Yeah, yeah, okay. I'll have to go back to my computer for that one, because that's separate. Yeah. Oh, is it? Oh. Thank you, sir. Yeah. Yes. Okay.
We do have any other business, Chairman, the Treasury Management Quarter 1 update 23-24.
Yeah, okay. Item 19, sorry, yes. Thank you, Chris.
Okay, thank you, Chairman. Item 19 then, the last on the agenda. The Treasury Management Quarter 1 update report for 23-24. Members may recall considering the Treasury Management strategy for 23-24 back in February of this year, which was subsequently adopted by full council. This report, presented on pages 263 to 276 of your supplementary agenda this evening, provides a Quarter 1 update on that strategy. It considers both the borrowing and investment activity during the year to date, should I say. The report also considers how the council performed against the relevant Treasury management indicators set for 22-23. The Quarter 1 report is also the first update that I've prepared in accordance with CITFA's updated Treasury Management Code, which was published in in December 2021, which was now been enforced since April 23, so just over coming up to 4 months now. The 2021 code introduces some changes to its 2017 predecessor, including a requirement to provide a quarterly update as opposed to the previous 6-monthly requirement, hence the report before you this evening. It also introduces some structural changes to reportable content, including additional disclosure on non-treasury investments and some changes to mandatory prudential indicators. Turning to the highlights then, Table 3, borrowing first of all, on Table 3, page 269, the Q1 borrowing position as at the 30th of June increased slightly from 267.5 million to 272.1 million compared to the position as at the 31st of March 2023, mainly due to additional short-term borrowing from local authorities of 4 million, and I'm sure you've spotted the contradiction in the earlier question I had. This actually bucks the trend, as I've said, throughout 2022, whereby there was a deliberate move away from short-term borrowing. Finance officers continue to closely work with follow Arlene Close advice, which often requires tactical borrowing decisions based on rapidly changing interest rates and a wide range of maturities. So in this instance, some of the long-term deals available during 22-23 have not been as readily available so far this year. So the advice we've been getting from Arlene Close is some of the longer term loans on offer have not been as generous as they were a few months back. So they've basically, the advice has been wait and see. So hence the short sort of uptick, if you like, on the short term borrowing. Likely to be short-lived, I suspect, but these things are monitored on a daily basis. Investments then, Table 4, page 270, the Q1 investment balance as at the 30th of June marginally increased from 14.1 million to 14.7 million compared to the year-end position, and with £12 million held in money market funds representing the bulk of the investments once again, and 2 million was held in the government's debt management account deposit facility, with a balance of 0.7 million retained in the bank account with NatWest. Moving on then to page 271, Table 5. This is the service investment summary. This is a new inclusion in the report in accordance with the new code. The loans that we grant to Qualis, from which the council receives a margin, are captured within the classification of service investments, as well as home assistance loans. The overall value of service investments increased by 4.6 million in Q1, up from 38.9 at the end of March to 43.5 at the end of June, which primarily reflects the further drawdown of development loans taken out by Qualis. Moving on to commercial property investments then, page 272, Table 6, an analysis of the Council's commercial property investments is presented. Shows a balance sheet value at the end of the year of 148.5 million, and with net income of 2.105 million after 3 months, which is very similar to the same stage last year, although rental income is expected to increase in the latter half of the financial year. Commercial loans, Table 7 on page 272. For the sake of completeness on investments, the Council has a single commercial investment loan outstanding to Qualis. It's a 10-year maturity loan granted in September 2020 for 30 million, and due to the nature of maturity loans, whereby the principal is repaid at the end of the loan period, the balance outstanding remains static at 30 million. And just to finish off on compliance then, in terms of compliance, once again I'm able to provides Section 151 assurance that the Treasury Management activity taken during Q1 complied with the 2021 Treasury Management Code, and that the committee can be assured that the transition from the 2017 to the 2021 code has successfully been made. I'm also pleased to confirm that the full compliance was achieved with the prudential and Treasury Management indicators included within the strategy, and that includes the new mandatory liability benchmark presented in the graph at the top of page 275, which demonstrates that although the council is a net borrower, external borrowing is minimised wherever possible through the use of its own resources, also known as internal borrowing, in order to minimise risk and reduce cost. Happy to take any questions.
Councillor Owen. Sorry.
Yeah, I had just one question actually. It was on, it said in the report that you cannot borrow from the Public Works Loan Board if you're going to do investments in the next 2 years, 3 years. I know we borrowed and then gave it to Qualis, and Qualis did the investments. Is that how, I'm going to say get round, I don't mean it like that, but as in like, are we allowed to do it because we've done it through Qualis, not directly?
Thank you, Chris.
The simple answer to that is the loan was made in September 2020 and the new rules were not introduced until about November or December of 2020, so we wouldn't be allowed to make that loan now. So.
Tony.
Yeah, following on from a previous question, can I just... Sorry. No.
Did I interrupt? Okay, carry on.
Yeah, following on from a previous question, I just want to check out the logic of that same 30 million, and the question previously was how much of the loan was asset-based backed. So this is the loan to Qualis. How much asset is in Qualis back in that loan?
Thank you. Tony. Sorry, Andrew.
So actually, I mean, there's a useful table actually. We do quarterly monitoring reporting to Overview and Scrutiny Committee on the financial performance of Qualis. They give us a requirement of the shareholder agreement, and they provide us with their overall indebtedness. There's a table in there that shows the value of loans against the value of assets, and that's updated quarterly actually, and it does show that the value of assets and loans are about equal at this point in time. So their security, or the security that Qualis provide, is asset-backed to the council.
So what did it say on the table then? If there was a table there showing the balance between the loan and the assets, what did it say?
I haven't got the exact number in my head, but it showed the two numbers were the same. So all of the loans given to Qualis are backed by assets.
Total fixed assets in the last report was just over 44.5 million.
Okay, thank you. Any other? Yep. So, do I now close the meeting? Yes, I've got to the end. There's nothing in. Sorry, I'm not being flippant. Sorry. So I draw this meeting to an end at 8:32, I believe. I'd like to thank the officers and the members for their input.